Welcome back. You're watching us here on Bazaar Morning Call. After a steep sell-off yesterday in our markets, we're seeing the GIFT Nifty indicating a lower start in today's trading session as well. It'll all depend on how individual stocks perform as well. So let's do that itself. Our research team standing by with the CNBC-TV18 list of top stocks for the day. First up will, of course, be Hyundai Motor. Sudarshan joins in with the details on that one. Sudarshan.
So after Q2 earnings that were mild missed to estimates, the commentary by Hyundai looks largely positive. Company expects stable growth in Q3, and for FY25, it believes industry is going to see a low single-digit growth versus the high base of last year's 8.5% growth and 23% growth the industry had seen a year before. And this outlook is after company has registered a double-digit growth in both inquiry and registrations in the month of October. On the pricing front, it says company has decided not to take part in the pricing war that industry has witnessed in the recent past, and it kept its prices unchanged in the first half and Q2. On the launches, it's planning to launch 4 electric vehicle models, and Creta EV for the mass market is expected to be launched in the Q4 of this financial year. So overall, it's looking positive for Hyundai.
All right, it's looking positive for Hyundai, looking positive for Nykaa as well. I'm looking at Nykaa reported their numbers. Of course, we had a cheat sheet when the company had reported their second quarter update, given us their revenue growth as well. But what was a surprise was on the EBITDA itself. Revenue for the company grew 24.4%. The EBITDA actually grew 28%. So, from 80 crore went to about 104 crores. And the net profit as a result of which, on a low base, jumped from 8 crores to about 13 crores as well. What is it that the margins were driven by? Strong owned brands performance. Secondly, they got a fair amount of marketing and services-led income, which is high margin, and shift from air to land shipment in their fashion business actually saved them on packaging and fulfillment costs. So that supported their margins as well, which were then plowed back into increased marketing expenses. Overall, GMV, if you look at it, beauty did well with a 29% jump. Fashion was the one which was under pressure, about 10% growth itself, which the company believes could see some recovery in the second half of this year. But strong operational performance, see some green on Nykaa.
All right, Mangalam, thank you very much for that. Well, BSE is what we want to focus on. Vamangshi is here with details on this one. Vamangshi, morning.
Well, good morning, Prashant. A good set of numbers coming in from BSE. When we look at the total operating revenue for the company, that saw an uptick of almost 23% sequentially. And this uptick is largely being led by the transaction charges, which were up nearly 26% sequentially, and services to corporates, which saw an uptick of almost 26%. EBITDA beat for the company was largely driven by lower than expected operating expenses, employee expenses, as well as the regulatory contribution was lower than what the street was anticipating. And there was a 14% sequential decline in the other expenses, so that aided the EBITDA. So given that, EBITDA saw an uptick of almost 37%. The EBITDA margin too improved for BSE from 46.73% to 52.12%. This is a 540 basis points uptick in the margin itself, and the net profit grew by 31%, standing at 346 crores, and this is much higher than what the street was penciling in. So overall, good set coming in from BSE.
All right, good set coming in from BSE. Thanks a lot for that, Vamangshi. Let's also look at Samvardhana and Motherson. Motherson and Bosch. Sudarshan joins in with those numbers. Sudarshan, how do they look?
So first, I'm going with green for both Motherson and Bosch. So starting with Motherson, earnings were a miss, but company expects margin in H2 FY25 to improve from the first half, with consumer electronics ramp up to support the growth in the latter part of the year. Also, 5 of the 19 greenfield plants have come on stream and 8 to come in the H2 of FY25. That will also support the revenue. Brokerages are also largely positive. Jeffrey has a buy rating target is rupees 215 per share. It expects a healthy 32% EPS CAGR over FY24-27. CLSA has upgraded the stock to outperform and target is raised to 190 per share. And Nomura 2 maintains buy call and target is rupees 209 per share. It finds valuation attractive at current levels. Talking about the Bosch, stock was down 5% ahead of the earnings in yesterday's session, but operating performance for Q2 has come largely in line. EBITDA was up 14%. Margin has come at 12.8% versus 11.9%. Even estimate was 12.8%, so largely in line. Commentary also is looking largely positive. It expects steady growth in the passenger vehicle segment and believes 2025 to mirror the growth of 2024 that company has seen.
Okay, all right. Thanks for that, Sudarshan. Well, in fact, we'll be chatting up with the management of Samvardhana Motherson at around 9:40 a.m. later today to detail the past quarter's numbers. But Vinny is with us. She's tracking a couple of companies, Subin and MedPlus Health. Morning, Vinny. Take it away.
Good morning. So we'll talk about the numbers of both these companies. MedPlus Health, a strong set of numbers that came in from the company, both whether you look at it on the revenue growth as well as the profitability and the margin front. That's the operational side also was very strong in terms of performance. Margin saw an improvement on a year-on-year basis, 7.694% versus 4.68% is what the EBITDA margin came in at. So a sharp improvement in terms of the EBITDA margins. Revenue saw a 12% growth, and obviously we are seeing an increase coming in the share of private label for the company, as well as the pharmacy operating performance has been quite strong. So this is what supported the growth for the company in quarter 2 FY25. So we're expecting a bit of a green here. Suven Pharma, good set of numbers when you look at it in terms of the growth, because the company managed to see a growth of around 11%. Margins a bit under pressure this time as well, what we're seeing, while profits saw a 3% growth. So revenue surely was strong because pharma CDMO side saw a good growth coming in, which supported the growth of the company, 40% growth there on a year-on-year basis. And the company said that they are seeing a good inquiries coming in from the CDMO business side. Pipeline is quite healthy in terms of inflow as well. So we are expecting a bit of a positive move here, though the company did say that the down cycle of API is now over. So that is also something that one should be watching out for. And in terms of the growth outlook, they are maintaining the growth outlook for overall FY25. But do not forget, the stock has seen a run-up of around 87% in the last 6 months. So maybe some bit of a profit booking is what one could watch out for in Suven Pharma.
All right, Vinny, thank you very much for that. PNC Infra is what we're going to focus on next. Vivek is here with details. Vivek, morning.
Well, good morning. Not a pretty sight as far as PNC Infra's numbers are concerned, plus quite a lot of other overhangs as well as far as PNC's outlook is concerned. Now, first up, in line with other infra companies, very heavy monsoon as well as worries as far as labor is concerned actually led to very weak execution. Revenues down almost 44% on a year-on-year basis. When you're talking about the EBITDA, down 11%, margins at 25%, but when you're talking about the profitability, down 44%. What actually did quite poorly, the road EPC business revenue declined 22% year-on-year, and margins there at 9% versus 11% on a year-on-year basis. Water revenues down 65% off a lower base, but however, the EBIT margins there were stable. Now, remember in Q2, just a couple of weeks ago, what's actually happened, and this is a significant material setback as far as PNC is concerned. MORTH, the road authority, has actually disqualified the company and 2 of its subsidiaries from all tender participations for a year. So in the call, there will need to be quite a lot of clarity that needs to emerge as from the be eligible for, and what will be the tweaking of guidance both in terms of order inflow for FY25 and whether any impact as far as execution is concerned, going with red on PNC Infra.
All right, Vivek, so red on PNC Infra as well. Upasna joins in with an update on Cello World. Upasna, how did those
Writing instruments and molded furniture saw revenue degrowth on a YoY basis, and company says that during the quarter there were several headwinds on export demand, particularly 9. PAT stood at 86 crores versus 86 crores as highlighted earlier. It was a flat growth. Now, EBITDA margin took a dip of 40 basis points, or down about 180 basis points at 51.6%. And mind you, the stress on the gross margins was again mainly due to writing instrument segment of the company. So all in all, flat growth from Cello World.
Okay, thanks for that, Upasna. Well, up across to Abhishek. He's here to tell us about PNB Housing. Morning, Abhishek.
Morning, Nigel. So, sources do tell us that your Quality Investment Holding PCC, that is Carlyle, will sell stake in PNB Housing. So, the banker to the deal is only Morgan Stanley. The offer price that has been put on the block is about 939.3 per share, which is at a discount of more than 4% to yesterday's closing price. Shares on offer is about 2.5 crore or 9.4% of the shareholding. 60 days lock-in period is there for Carlyle with respect to further stake sale if they want to do. So they held about close to 19.9% in the company before this, sell that they are intending to. And post the stake sale, they might have about 10.5% residual left in the company. Recent deals, if you take a look in August and July, General Atlantic sold about 5.1% equity, which was a clean-out trade in August. And in June, Asia Opportunities and General Atlantic had sold about 4.2% equity stake in the company. However, the price over there was close to 775. So this transaction will happen at about 21% higher price than what the previous transactions have taken place at. Back to you.
All right, Abhishek, thanks a lot for that. So that's about PNB Housing Finance. With that, let's give you a quick recap of the top stocks in case you missed the entire list. Stocks with positive news flow: Hyundai, we have Nykaa, BSE, Samvardhana, Motherson, Bosch, MedPlus Health, and Suven Pharma. Whereas stocks which are likely to have an impact on negative news flow, we have PNC Infra, Cello World, and PNB Housing Finance.